What are you guys going to put out tonight, 7 p.m.?
Well, I think the focus is going to be on the Fed, because I think the Fed made a very important shift this week. Yeah.
Was it a regime change? Michael McKee, with that killer question the chairman didn't answer. Sarah Vellis over at Deutsche Bank says, yes, there is a regime change.
Well,
what do you say?
I would say there's a reaction function shift, and I would say this is the first independent step we've seen from the Powell Fed, as it had been basically following the Yellen path towards normalization.
Critical question. This is a really important conversation. Are they doing it within a traditional Phillips curve model, or are they really on their own right now trying to figure out how to move on 12 years from a balance sheet adjustment?
Well, I think there's a piece of this which is traditional risk management. It's about what they see having happened in financial markets in the global economy. But the new piece, and I think the really interesting piece, is some combination of a really burying of the Phillips curve in some sense, as well as perhaps a sense that they're willing to tolerate a higher level of inflation as we go forward. Certainly we've seen Clarida, Williams talk in those terms recently, and there's a suggestion, there's not an explicit message there, but there's a suggestion of that at the last meeting here, that the Fed will tolerate a higher level of inflation as well. So I think we got a Fed that has told us not only is it pausing, but it's on hold, and that it needs actually to see direct evidence of higher inflation before it will consider tightening again.
Yeah, but Bruce, what are they looking at? What is the Fed looking at to, you know, I know it's looking at financial conditions. I know we've also had some news on the balance sheet, but isn't it embarrassing if the Fed then actually hikes after all they've said? And will the data today give us a glimpse of what's to come?
Well, I think the data today is going to be solid in terms of what it signals on growth. I don't think we're going to get much here that tells us anything really about where inflation is going. I think what the Fed is telling us, and if they're going to be consistent, need to follow, is that the next move is going to be driven by growth if they're going to actually think about easing, and it's going to be driven by inflation if they're going to be thinking about tightening. And that's a different message, as Tom was mentioning a moment ago. They're no longer signaling that they'll forecast inflation off of the changes in the unemployment rate, as they have been going forward from here.